right. Greed works.
Welcome back to another episode of Let's Play Wall Street Raider. I'm Rakem, your host. Last episode we ran 48.9 or 49.8, I forget which, billion dollars up to 2.7 trillion. The majority of that was from the interest rate swaps that the bank has been engaged in. We're only 2 quarters into a 18-quarter set of agreements. So the cash is just going to keep on coming, we hope. And the challenge is finding a place to put all of that money to work. So at the end of last episode, we had a flurry of activity as we started to invest in the global telecommunications industry. We still have a lot of work to do there, and we'll get to that in just a minute. But for right now, it's October the 8th. Millennium is going to issue an earnings report on the 10th. And so I want to pull back from the global telecommunications industry for right now and take care of my own personal situation and Millennium. So as you can see, we have 28 billion in cash. And I'm going to start by setting the stock ticker to 1 because we have a lot to do and we don't need the ticker running very fast while we do it. So the only stocks that I have are the bank, Millennium, the bank and Millennium. And then I have some stocks that I've shorted. I don't have any commodities. I don't have any options. I don't have any other investments going on. Now I've noticed that spot crude has now climbed up above 140 and looks to be going down again. So once again we're going to short it. Why is that grayed out? Oh, futures. Okay, sell short. I picked commodities trading instead of futures trading. So I'm going to set it all the way out to the last one. And we're going to do the full 100,000. Okay, and the cost on that was 11 billion. So we're going to do it again for another 100,000. Okay, so now we have 5 billion left, 6 billion left. Let's see if we owe any taxes to pay. And we don't. We've prepaid exactly how much it says we're going to owe at the end of the year. So let's just repay our loan. And while we're at it, let's make SunTrust our bank. Okay, so if we do borrow, any interest that we owe will get paid to SunTrust, and that'll help SunTrust. All right, so 3 billion is what I have left. I'm just going to leave that there as cash. Here's my list of assets. And let's take a look at Millennium. And if this, by the way, if the spot crude goes up, we'll just short it some more. Okay, because it's not going to stay up forever. If it goes up to like 170, we'll short it again. If it goes up after that to 200, we'll short it again. And we'll just hang on to those futures until it drops below 100. Alright, so Millennium is projected to earn 762. And we just got done buying all of the loans for the competing companies in the same industry. We also upped our growth rate and we left our R&D alone. So the growth rate's at 13% and we're growing at 20%. And based on these numbers that I'm looking at, it's probably going to be deteriorating. And it is. So our 762 is going to be better than what we made last year, but I don't like that it's trending down. I mean, it's fine in terms of what it's going to be earning next year, as long as the industry turns around from the supply-demand situation. All right. So what I am inclined to do with Millennium is to change its growth rate to match what the industry is growing at, so that we're not adding to the deteriorating situation. Okay? We're just growing at the same pace that the demand is growing. But we're not adding to the excess. The second thing is our management has been downgraded to reasonably competent, and we have cash. So I'm going to up the R&D to 16%, so that we get back up into the very capable category. Nycomed, which is in our industry, the industry that Millennium is in, biotechnology, has just gone broke. Alright, so here we earned 836 compared to 406 from last year, but our earnings were off from what we made last quarter. Okay? It's not a big deal, but we don't want that to continue like for very long. Like if we're still doing this next year, that's a problem. Okay, so let's see what we're estimated for next year. Next quarter is 1144, so that's great. All right, and did our cash go down? No, we pretty much stayed flat. I think we had 2994. All right, so let's see what our competitors are doing. Good. He changed to -10. That's going to help us. 18. These others may go down. I don't know if their earnings reports come out or not. All right, but as far as the way this looks, it looks good for right now. All right, so we've taken care of our stuff. Let's look at our short positions real quick before we move back to global telecommunications. So starting with tech resources, they're still growing or still losing money. And with the interest rate as high as it is, this debt is just killing them. So if the interest rate goes down, we may cover, but if not, we're going to just hang on to that one. Okay, Mazda. Also losing money. And their debt has jumped. And with the interest rate as high as it is, it's not surprising. And the industry, where's Mazda? Right here. And it's deteriorating thanks to Toyota. So keep up the good work, Toyota. We will hang on to Mazda for a little bit longer because he's losing money. Alright, next one is Barrick. Barrick is losing a lot of money. And he still has a long way to fall. He lost 166, no, he gained 166 million last quarter, and now he's going to lose 291 times 500, so what's that? He's going to lose $1 billion and change. Well, say goodbye to your overlay on your stock price. So we're going to hang on to him. All right, so that's all of my my stock holdings. Now let's look at STI. STI going to lose a penny? I don't think so. Not with half $500 billion coming in interest rate swaps. Now, this is calculated based on operating assets, which is everything except the interest rate swap. So all the stuff on this list. And we have $306 billion in cash that we need to put to work. We've already invested everything that we need to in Nippon from the bank. So we need to put it to work in the business portfolio, in consumer loans, in mortgages. And then we need to keep a cash reserve for companies that want to borrow more money. So typically the way I do this is I try to keep these three numbers roughly even, and I want to have a 20% reserve in cash to allow for additional lending. So if I take 20% out of there, that's 60 billion. So I have 240 billion to put into these, so that's 80 billion apiece. So I'm going to start with buying mortgages and consumer loans. So I go to Other, Buy or Sell, Buy Consumer Loans, and I'm going to buy 80 billion. Okay? And the current yield on that is 13%. Now I'm going to buy mortgages. And prime and subprime is new to this version of the game. I don't want to have a disaster if subprime crashes, so I'm going to put 80% of that 80 billion in prime and the other 20% in subprime. So 80% of 80 billion is 64, so 64 billion. And 16 billion in subprime. Okay, so now we've got 143 left, and 80 of it is going to go to business loan. So what businesses whose businesses or which businesses do we want to buy their loans? And the answer to that is all the companies in the global telecommunications industry. Because if they try to expand, we want to be able to freeze them. Now, most of them are running out of credit, Most of them are in a bad credit situation to begin with, so we won't need to freeze any of these. But if one of them tries to start growing beyond this number, whatever that number is at the time, then we can freeze their loan, and they can they'll have to either issue bonds or do an IPO or whatever and raise money some other way. So like this guy, he's growing at 17%. That's Nokia. Okay, well above the 5%. Now it doesn't matter right now industry-wise because everybody else is growing at a negative, and that's because these earnings are depressed. But it would help us out if he would stop growing that fast and just, slow down so that the rest of the industry can get into a good return rate. All right, so the way to do that, I showed you last time, and we're going to show you again. But this time we're going to try to buy them all. So what I do is I take a picture of this, and the way you do that is Alt, print screen, and then I bring up Paintbrush, and I do a paste, and there it is. Okay, so now I go to the bank, and I go to financing, other, buy or sell bank loans, buy businesses loans. Yes, I want it from a list, and no, because I want it alphabetized. So now I arrange these two windows to where I can see them both at the same time. And I just go down the list one by one. Now, if they bank with a bank that is either owned by the computer player or sometimes by another corporate entity, sometimes their loan won't appear on here for sale. So it's not guaranteed that I'll be able to buy all of them. But we're going to buy as many as we can. So AT&T, which is right here. This is the amount of their loan and what it's being sold for. So as you can see, there's like a 3% markup. Okay? And the markup you pay is based on their credit rating. So the the B rating, you can see I get a discount. But triple B, there's a markup. D rating, huge discount because they're about to go bankrupt. Okay, triple C, slight discount. Better than the B rating, but not anywhere close to the D rating. Okay, A rating is like a 6% markup. Or AAA is a 6% markup. But anyway, so we're going to buy this one. We don't really care what the markup is. We got enough cash to, well, actually, he's 90 billion, 94 billion. So if we buy this one, it's the only one we're going to buy right now. But I'm fine with that. He's the biggest. So he would have the most effect if he were to try to grow. So we'll buy him for right now, and next month when all the income from the interest rate swaps come in, we'll buy the rest of them. So let's buy him. And no, we're not going to buy any others. So we have 46 billion in surplus to account for additional lending. And that's all we're going to do with the bank for right now. So let's get back to Nippon, which is trading below its value. And we have a minority stockholder here that we're going to buy out. Nippon has no cash but 80 billion in loans. And 1% of its stock would cost us, 4 billion. So we're going to buy it back. And we'll buy it back on credit. So let's do a green mail. Telefonica, 1%. And we're currently losing money. I think our next earnings report is supposed to be a negative $11 a share. So we're going to make them a low offer. And by a low offer, I mean 21%. Okay, and they've accepted. What do you mean we like... Well, I guess let's change banks, and then we'll have enough credit. Change bank to STI. Okay, now keep your eye on this this number right here instead of 0. Oh, that's right. We got to pay it off. Got to pay it off. Okay, well, I guess we're just going to have STI buy out our minority stockholder. So buy, sell, buy Nippon, and we'll make a tender offer. Yes, we want to buy it 1%, and we'll offer 21%. Well, they were willing to take a green mail for 21. Why won't they take a tender offer for 21? Let's try again at 24. Still inadequate. All right, 28. Finally. Okay, so we own 100% again. So if we want to contribute more money to him, we can. Alright, so let's go back to Nippon. So, we're all out of cash. And we're growing at a negative 10%. There's a couple more companies that we can buy up. So these two, that's Japan Telecom, and I don't know what company that is. But those are the only two that are left. Now we have a 25% market share. And generally what I like to do, especially at this stage in the game, is to buy my way into a market share of between 25 and 30, run it up to between run it up to the neighborhood of 45%, and that's when I sell it. So we don't have to buy these other two companies. We can run it up from here. But these return rates are too low. I need to get that up to like 30%, and before I start growing. So I want this industry to slim down some more, so that we can earn 30% on capital assets, and then I'll start growing. So I'm going to continue to slim down, pay off my loan. That's going to drive up my earnings, so the stock price will go up. Then I'll increase my asset base to have those monthly earnings continue to grow. Okay, because right now I'm shrinking my asset base in order to pay less in interest on my loan. Okay, but anyway, so there's not really anything left for us to do at this point. All of a sudden I have 26 billion again in cash. So I guess all of our shorting positions and our commodities have all gone down, and that cash is now in our pocket. So that's good. Gone down. He's about the same as what he was, but this one's gone down some more. I think he was at 38 or 4,000, something like that, when we checked on it just a couple minutes ago. How's that for a return? Boy, when I sell this one, I'm going to have to pay taxes, a huge tax bill when I sell this one. Okay, so next company up for earnings reports is Nippon, I believe, on November the 17th, and that's a month away. So we're going to turn on the ticker, and I'll come back when the earnings report pops up. Okay, negative $11 per share, which is way down from what we earned last time, but I think if we look at the projection, it's about to go up, and it is 4 cents, and it'll go up again next time. Okay, we're very capable. which is good. We were reasonable before. And we have some cash to pay our debt down, exactly $12.75. All right, and we didn't have to borrow last quarter. We earned that, so let's pay down our debt. Okay, and hold the phone for just a second. Let's look at the industry. All right, we are already up to 23%. That's good. That's what going from reasonably competent to very capable did, making it an extra 11% on our assets. And this has dropped to 3%. I think at this point what we want to do is we want to change our growth capacity down to like -1. Let these guys be the one that slim down. So I'm going to change that to -1%. That'll preserve our capital assets, or the majority of them, so that we can come back strong when the interest rate, when the return rate gets up above 30%. Okay? So I think that's all we have to do there for right now. But I've got a whole bunch of cash now that I need to do something with. So he's gone down significant, he's gone down significant, he's gone down significant. So am I getting all, yeah, this is where it's coming from. I've made 40 trillion or 40 billion off of this right here. So let me find some place to put it. I guess I could buy up those other two companies in the global telecommunications. Right, so Verizon is a good buy. FTR, whatever that is a good buy. And there was another one. This one is a good buy. This is the best buy of the three. So let's take a look at him. It would cost $9 billion plus the premium of 20%, so call it $11 billion to buy him, and $10 billion to pay off his debts. And I could contribute cash to him and then merge the two companies together and pay down Nippon's debt a little bit. Boy, in just those few clicks, I've gone down to 52 billion. Something jumped. It wasn't these. It was this. The price must have gone up a little bit. I didn't see what it was. Alright, well, we're still going to do that. We're going to buy FTR 100%. And we're going to contribute all but 10 billion of this, so 32 billion. Okay, and we're going to repay our loan because we have a loan now for some reason. Okay, so FTR, we're going to have it buy back its bonds and pay off its debt. And incidentally, all these bankruptcies you're seeing, these are being caused by a combination of two things. One, the high interest rate, and two, the interest rate swaps. Because these are the people that were the other party to the swaps that we entered into, and they're losing money to us. So the ones that were already, on the verge of bankruptcy, they're going bankrupt now. So let's double check. Okay, no bonds left. And we could eliminate their dividend, but we're going to merge this with Nippon. So okay, so we're going to do a merger with FTR. And we own 100%, so we don't need to offer a whole lot. It's been approved by 100% of the stockholders. And this is how much it cost us to do the merger. And yes, I want to liquidate it. Okay, so I own 19% and SunTrust owns 81%. And if SunTrust's ownership had fallen below 80%, I would have bought whatever I needed to get it back up to 80%. Because what happens when you own 80% of a subsidiary is you don't have to pay taxes on dividends, and you get the maximum amount of credit for the income that your subsidiary makes. So for a better explanation of that, you'll need to read the manual because I don't understand the whole thing. All I know is the best benefit to the parent is if it owns 80% or more of its subsidiary stock. Okay, that being said, we have some cash now to pay down our loan a little bit. So we'll repay that. And our estimate has gone up to $2.31 a share now. And we're still very capable despite having just merged with a distressed company. All right. So the next earnings report due up is the bank. And we will fast forward to that now. At least I think it is. Yeah. So we'll fast forward to January 4th. SunTrust earned $450 billion from interest rate swaps. And its earnings per share were up. We beat the estimate and last month's quarter. Or no, wait. No, we didn't. 772 is what we made last quarter. But we did beat the estimate, so that's good. And we beat last year. That's good. Okay, and let's pause this for a second. Take a look at what we have. We've got a memo to deal with first. Okay. Our market and demographic research shows that two very significant and steadily growing trends that we are not currently taking fully into account under our current marketing strategy. One is the increasing age of the population, as improved health care keeps people living longer. And the second, especially interesting trend, is the rapidly increasing incidence of Alzheimer's disease and senility from other causes in this older population. One statistic we came across suggests that individuals have about a 50% chance of developing Alzheimer's if they live past age 85, which many people are now doing. Okay, so this is another cheat scenario. It raises an interesting possibility for our marketing strategy. We should begin marketing extraordinary efforts to acquire elderly clients over the age of 80. The older the better for our banking and trust services, as many of these individuals, if not already experiencing senile dementia, soon will be. They will be ideal targets for high-pressure marketing of services they don't need at very lucrative above-market rates. So basically, predatory tactics against people who are helpless. They don't give us any definitive dollar amount that we can earn from this to know whether this is a good choice or, a good gamble or not. And as such, I have incomplete information and I'm inclined to err on the side of caution. Do we implement a program of targeting older individuals who are exhibiting early signs of dementia and others who are at high risk of Alzheimer's due to their advanced age? And this one I'm also going to answer no, simply because I don't know if there's a benefit or not. I haven't actually seen this cheat scenario before. So I don't know. And I'm not going to risk it. We're making too much money with SunTrust to put it in a compromising position. So the answer is no. My apologies, Gordon. All right. So here's our financial report. We have $480 billion in cash. And we need to put it to work. So the plan is the same. Buy up bank loans in the global telecommunications industry, but we're going to keep our ratios as level as we can. So we have 480. We want to preserve 20% of our net worth. Our net worth is now 1.2 trillion. So 20% of that would be 240. So we have 240 to spend on loans. 240 divided by 3 is 80,000 each. So we're going to buy 80,000 just like we did before. So subprime would be 16 billion. Prime would be 64 billion. Consumer debt would be 80. And now let's go find a loan to buy. Here's our list again. Alright, so the next one up that I want to buy is actually Nokia, because they're the ones that are growing at 17%. Now you can hit the letter N and it'll go straight to the ends. Might save you some time. Alright, so 32, that would leave us with 48 still to buy. Alright, so let's look at Telecom New Zealand. And they're actually going bankrupt, so let's not buy them because we'll take a loss when they go bankrupt. Alright, what's another big one? Verizon, probably. Yeah, they're a big one. So if we buy them, that's 37 from the 48, so we'd have 11 left. Okay. So let's find one of these that's going to be 11 billion. Alcatel, maybe? No, that's 27. That's okay though. We don't have to have exactly 20% surplus. So let's buy them. Alright, that's it. So we're a little bit over here, but that's fine. We've got a little less than the 20% surplus. And we're trading at 400%. Okay. And we've slipped to reasonably competent, so let's change that to 8% or 7%. Alright, now I have too much cash again. Spot crude has dropped to 110. So Nippon still owes money, right? Yep. So let's buy that other company. Was it this one? Well, even if it wasn't, it'll do. Okay, so nobody owns any of it, so let's buy it. And let's contribute to it. And I'm going to just give it 50 billion. All right, let's have it buy back bonds. All right, these bonds have matured, so I can buy them back at exactly 100%. Because if they're privately owned, I have to pay this plus 5%, 5 points over the par value. So we'll just skip all that and buy it back at 100%. Okay, and now we can merge it with Nippon. So we do a merger. And liquidate. Okay, so now the combined company can pay off almost all of its debt. And let's see if it'll let us change banks now. Alright, and it let us change banks. Alright, now, the bank's percentage of ownership has probably fallen below 80%, and it has. So I'm going to have the bank buy back 13% from me. That would take it below its 20% reserve, though. Alright, we'll wait until next quarter to do that. And have it buy it then with the cash that it'll have on hand at that point. Alright, so next up is Millennium. And it's trading close to 1,000 now, so we're 2/3 of the way to our goal. So let's go to Millennium. Look at that jump in price now that everybody's stopped expanding. See, we're expanding at 13. He's negative. He's negative, negative, negative. Center Core we froze. So how can he afford to grow at that rate? He can't. He doesn't have any money. So he may be growing there now, but he won't be able to do that for long. Alright, let's see what Millennium earned. And we got another technical breakthrough. Good. Alright, we doubled our earnings. And our cash amount is growing, so we could actually up our growth rate if that doesn't, cause the market to deteriorate. And our projection is for $18 a share next time. And look, we've already surpassed our goal. So the question is, has it peaked or will it go up some more? And I think it'll go up some more. Look, we're at 51%. The growth rate is 4 for the next year, but long-term growth is 15. But I mean, with this kind of a return, there's no reason to sell at this point, because this should continue for a while. So we're going to hang on to it and let it go up until it starts to peak, and then when it peaks we'll sell it. So let's go ahead and split the stock and refigure what our target price is going to be. Alright, so here's Millennium. We put in 88.28. And it now has how many shares? 300 million. So first we got to multiply it times 5 and then divide by 300. So 147. That's what our target is, and it's already above that. So basically, when that stock starts to peak, we'll need to keep an eye on it. So let's clear this and fill it again. And check on our shorts. Our shorted stocks, I mean. So he's roughly the same place he was. These have both gone down 300 million since the last time we checked them. So let's look at him, since he hasn't gone down any in the last quarter. Okay, he's scheduled to lose money still. And look at that. He's going to lose, in one quarter, he's going to lose as much as he lost all last year. Alright, and that's fine. We're going to hang on to him. Okay. Let's look at this one. Negative. So in 2 quarters, he'll lose more than he did all last year. Let's see. So he's losing 500 million per quarter. So he won't go bankrupt, but he's still going down. Let's look at the industry. This is Mazda. You know, why is he paying that dividend? He's already going broke. Why pay out money? You're not bringing any in. Some of the management of these companies, I'm telling you. I don't know why they're rated as reasonably competent when they're paying out the dividend like that. Okay, so what's the other one? Barrick Gold Mining. Now his percentage has gone up. He's probably going to have a positive. No, he's not going to have a positive. Why is he not going to have a positive? Because he has too much debt. And he's probably got an interest rate swap with us. Yep. And he's losing $1 billion already this quarter on the interest rate swap. So we'll hang on to him too, especially since he's trading above his net value. Okay, so there's no reason to cover any of those. Alright, so the next one up is Nippon, which we're supposed to have a nice increase in earnings. So we've already turned it around. We're very capable. You know, and we got tax loss carryovers, which is also good. We've got almost no debt now. Let's look at the industry. We're still growing at a negative rate, but that's because we want to get this up to 30% before we start growing. But there's no reason to grow at a negative anymore because we're going to make money. So let's change our growth rate to just 1%. And then when we hit 30% on our pre-tax return, we'll up that. We'll increase it. Okay, Nokia, I think we want to freeze their lending. So let's go to the bank and freeze Nokia. Oh, we already did. When did I do that? I don't remember doing that. Okay. Anybody else growing positive? Not really. Not enough that we need to worry about it. All right, so let's fast forward now to the Nippon earnings report, and I'll be back when that comes up. Hong Kong Telecom must be a subsidiary of Nippon or something that we own, but it's not. So why is that coming up? Did we have it selected at some point? Is that one of the ones we shorted, maybe? No? Huh. I don't know why it's showing it to us. Alright, Nokia had a jump. And they were low on cash, so they had to sell because we cut off their credit. So I hope that means that they lowered their growth rate. So here's Nokia. We, instead of $3 a share, we made $5. And we paid down most of our loan, and we have enough to pay off the rest if we want, but we don't need to. We're up to 28%, and Nokia is now growing at a negative rate, so that's good. We got that going for us, and the growth rate has jumped to 6% from 4%. So we're almost ready to start growing, and we'll start growing at whatever rate we can get away with based on what these other guys are doing. So once we hit 30%, if this is 10%, I'm going to make this like 30, 35, whatever it takes to stay in a improving supply-demand situation right up until the point where it becomes deteriorating. And I'll show you how to determine what that percentage is when we get there. Alright, does Nippon own any stock? No. So I don't know why that Hong Kong Telecom came up. No idea. No idea why it came up. Just one of those things, I guess. Alright, this has started to inch up again. And I think what we'll do is we'll watch it, and if it gets above 110, we'll cover it. But for right now, we'll let it go. Wheat has dropped to 345. Not sure what this means for us. Except maybe if you're in a manufacturing industry and your company is incorporated in one of these countries, you may see a drop of some kind. And Nippon is in Japan. So this may affect us. Let's see. Now we're going up. But I mean, we're in Japan, so not sure what that means for us, if anything. Okay. So keep an eye on this number. If it's 110, we'll pause. And this is supposed to be easing, going down, so we'll keep an eye on that too. Wheat. Now what? Oh, another bankruptcy. Let's take a look at wheat. It has been dropping. So I think it's time that we bought some futures in wheat. It's at the lowest point it's ever been. So let's do that. Commodities. And we want I didn't want this. I want futures. Futures of wheat. And we're going to buy. We got plenty of cash, so hopefully we won't have to borrow. Okay. 2025 delivery, and right now it's 2020. Okay. Cash outlay of $2 billion. So let's buy some more. Let's buy all we can. I think it limits you to 50,000 contracts on wheat. All right, and corn I think is at its lowest point also. No, it's gotten down to $2 a share, or $2 before, but it's pretty darn low. So let's buy that too. Okay, 1770. So we can do all 50,000 of this one also. Okay, so that's 5 corn, 5 wheat, and we've got 2 oil. Alright, let's look at silver. Alright, silver is right in the middle of where it trades. So let's leave that alone. Gold, still depressed, but slowly trending upward. Slowly trending upward. Usually when I buy gold, I buy it at less than 1,000. But we could probably make money on it, but I don't think now's the time. It's not really moving up or down any significant amount. So let's hold off on that. Alright, 18 billion I'll just hang on to. So, what's up next? It's February 26th. Nippon was what we just saw, right? Yeah, so the next one up is the bank, I think. On April 4th. Alright, so we'll fast forward to April 4th, unless the spot crude gets up to 110. Alright, spot crude has jumped to 109 and change, so I'm going to cover my position there on both of them and just take my profit. Alright, and these are doing well, so we'll hope that those go up some more. And we won't do any more futures on crude unless it gets above 140 or below, in the $40 range. I like to do it below 40, but sometimes I'll do it in the mid 40s. All right, it's only 4 days to the earnings report for the bank, so let's just get there. And here we are. So 656, down a little bit from last quarter, still above a quarter from a year ago. We have 554 billion to put to work. So let's find a place to do that. We got some more loans to buy over here in the telecom industry. So let's see how much we're going to have to spend here. So our total capitalization now is 4.5 trillion. So we'd like to keep 900,000 on hand. Scratch that. We don't need to have that much cash on hand. We need to base it off of the business loans. So we need to have 20% of this number, not the total net worth. I don't know what I was thinking. Okay, so 20% of this would be 40 billion, roughly. So we can invest all 500 of this. Divided by 3, that's what? 770 for each one of these. Okay, and 80% of 170 would be 146. So let's buy some loans. All right, so subprime, we're going to buy 34 billion. Prime would be 146. No, 136. Okay, consumer loans 170. All right, and now we need to look for some business loans to buy, and we're going to look for them off of this list. So, buy or sell, business loans. Yes, I want to pick from a list, and no, I want them alphabetized. All right. So, Telecom New Zealand we already bought, right? Nope, we didn't because they're bankrupt. Okay, so Nokia we bought. China Mobile would be next. China Mobile right there. And they're huge. So 170 is what we were going to buy. That's 150 of it already. All right, who's up next? Telecom Italia. Okay. And Telecom France, we might as well get them too. And that leaves us with 12. SK Telecom. Too much. Royal KPN. Of course, I think we already bought them and liquidated them. So Hong Kong Telecom. Alright, we got 8 billion left. So general telephone would be next. Let's just make sure. Yeah, well, 60 billion is what we got left here. What do we do? We just make some money on something? Oh no, we're already above. We were supposed to keep these flat, so I'm already above those others. Let's hold off on any more. We'll just keep the 100 billion. And let's look at Nippon Industry again and see if we need to freeze any of those or not. Okay, so he's positive. That's general telephone. So we'll want to buy him next. But he doesn't have much of a loan. So freezing him really isn't going to do much. Because he's such a minor player anyway. I mean, GTE is way down here, 1% of the industry. So we've done all we need to do. We're at 29.1%, so let's figure out just how much we can grow. This is now at 4%, and we are 30% of the industry. So to grow 4%, and we're 30% of the industry, 4 divided by 0.3. 13% would cover the increased demand for the entire industry if everybody was growing at 0 but us. But these guys are all growing negative, right? So we can probably double this and then check our research report to see whether or not the industry is still improving. So we go to our company Nippon, go to management, growth rate, and we'll go to 26. Now we go to the research report and it says that it's still improving. Now if we go to 36, oops, let's try that again. Alright, now it's deteriorating. So somewhere in between 26 and 36 is the sweet spot. I'm just going to make it 28. Because I want to be on just this side of deteriorating it. So we're to where the industry is improving, but it's not improving that much. That's what I want. Alright, so we may be going into debt to do this, but hopefully not a lot. So let's repay our loan for now, since we have the cash. And we've only dropped to 26%. Are we still very capable? Yes. Okay. So that's it. Now we're growing at 28%. We finally have a company that's growing a significant amount. And when this percentage market share gets up to like 46, 48, that's when we'll look to sell, provided that, we're going to make 4 times our money. All right. Oh, and I forgot to have the bank buy the stock back. Shoot. Do we still have enough cash to do that? Yeah, because we only wanted like a 20%, so 20% of that is 70. We have 80 billion. Let's buy it. And the answer is yes to that, and we're going to have it by 14%. And we spent 55 billion doing that. Okay, now I have too much cash again. So what am I going to do with it? That's the question. So let's go to industrial growth rates. and see if we can find an industry to put it in. Biotechnology? Holy cow. I guess our what we've done there has really turned the industry around. But we still own Millennium, so there's no point in buying more. All right. Ooh, right here, network and telecom equipment's going like crazy. Internet service finally turned around. All right, let's look in network and telecom and see if there's any bargains to be had. Oops, wrong button. Here we go. Well, there's a couple. The returns are great. Cisco's the best one, but I mean it's trading kind of high. But let's take a look at it. So the earnings are going up. It's reasonably competent. It has tax loss carryovers. It's worth $43 billion and it has too much debt. So we buy this one, and with the rate of return that it already has, all we got to do is just pay down the debt and it's fine. So we can turn this one around real quick. This will be a hit and run. All right. We didn't look to see if it was already owned by anybody, and it's not. Okay, good. All right, I know that we're paying, like 170% of its net worth to buy it, but we're going to double that or more, so it's going to buy 100%. We spent $70 billion buying a company that had a net worth of 40 something. So I mean, I know that we're paying a premium. It was worth 44 and we spent 70 something to buy it. All right, so now let's give it 45 billion. Actually, let's not give it the whole thing. Let's give it 32 billion. All right, now let's have Cisco buy back its bonds. Was that all of them? No, okay. I thought there were more. All right, yes, I want to buy back from a current bond holder. And yes. Yes. And that should be it. We got another major announcement? Wow. So we made $1.45. That's just crazy. 3 in a row? I never seen that. And look at that cash. We can grow huge now. Let's see where we are. We're growing at, look at that percentage, 66%. Did this grow too? Yes, 13%. So with him growing negative and these guys growing negative, we can grow like crazy. So let's make it, let's grow at 40%. Yeah, 40% let's grow at. And the industry should still be improving. It is. So we'll grow at 40% and drive up our earnings. What stock price did I say we needed? Was it 147? Couldn't have been. So 88.28 times 5, 44. So we're already above that. Divided by 300, 147. So there's something flawed here in my logic. Did we split again? Yeah, we got 500 shares out, 500 million, not 300. So let's redo the math. So 88.28 times 5 divided by 500, 88. So we're already above it. And the question is, how much higher are we going to go? Okay, so we've been holding right around 100 to 110. What was our max? 110.73. So I mean, this industry is in such good shape, and we've just had 3 breakthroughs in a row. I don't know that I want to sell this guy. He's at 430% of his value, and he's got nothing but growth in front of him. So we'll hang on to him. All right, let's get back to Cisco. And we'll have him pay down his debt. Alright, now let's see what we need to do management-wise. He's reasonably competent. And he's already going to have an increase in earnings. And its situation's improving. So we don't need to grow negative anymore. We do want to eliminate the dividend. So let's change the growth rate to 14, dividend to 0, and we're reasonably competent. So we're going to change this to 15 so that we're 1 over him. So 0, 14, 15. Alright, so 0. Growth rate's 14. Okay, 14. And the R&D 15. All right. So let's see how we do with that, and if we need to adjust it, we will. But hopefully we won't have to. Just depends on what these other guys do. All right. We have been going for a long time now, so we're probably going to end the part here. I still have 100 million or 100 billion to invest somewhere, but we've been going long enough, so we'll save that for next time. The action's going to get just fast and furious over the next 5 years. We're going to have $500 million to deal with every quarter, and it's a good problem to have. So until next time, this is Rakem saying, have a good one.